This is Alan Bush with the Daily Financial Futures Forecast for Tuesday, April 14th. Starting out with the stock index futures, we are seeing prices under some pressure this morning. We did have some of the economic reports today coming in on the weak side, especially the retail sales coming in up 0.9%. This compares to the estimate of up 1.1%. However, we do feel that there will be recovery later today. Still thinking that the main trend is higher. Also, we continue to believe that any weakness that we see in the economy, whether it's in the form of weaker economic reports or in weaker than anticipated earnings, will be met with a Fed that will delay raising interest rates. So in spite of some pressure this morning, still looks like the main trend is higher. Looks like there can be some recovery later today. And we also would expect to see some new historical highs made over the next 2 or 3 months in the S&P and also in the Dow. Over in the foreign currencies, we are seeing the dollar index sharply lower, all of the other major currencies trading substantially higher. And this is primarily due to the retail sales report here in the U.S. coming in weaker than anticipated. Longer term, as far as the commodity currencies is concerned, the Australian dollar and the Canadian, we do believe that industrial commodities now have turned the corner and are likely to work higher. Even the crude oil, which has been under so much pressure over the last several months now, is over $9 higher from the lows that it made. So with that in mind, the industrial commodities should be a supportive influence to the Australian dollar and the Canadian dollar. Now, I would hold off on buying the Australian dollar until after the next RBA meeting, the Reserve Bank of Australia meeting next month, since there's a very good chance that they will lower rates. However, the Canadian dollar, I think, is the best long now in all of the major currencies that we trade. Interest rate differentials should be favoring the Canadian dollar as well as a turn, in our opinion, in the industrial commodities. So once again, the Canadian should be the best long, and I think we can see higher prices for that currency. Moving over to the interest rate markets, sharp gains, especially at the long end of the curve, the 10 and 30-year issues. This in response to the retail sales that came in on the weak side. Also, we had a couple of other smaller reports that were, for the most part, weaker than anticipated. So the Fed, we believe, needs to hold off on a rate increase. And any delayed rate increase, of course, is supportive to interest rate markets. So we do believe that the long-term trend still is intact. Higher for the 10 and 30-year issues is what we continue to believe. So continue to trade those from the long side. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.